This is the Champion Forum podcast with Jeff Hancher, the forum for leaders, champions, and dreamers.
A weak financial strategy is a top reason that entrepreneurs fail. I mean, look, it could be poor cash flow management. You might or might not know this, but approximately 82% of small businesses fail due to cash flow issues. It could be a lack of tax and financial planning. It might be scaling too fast without a proper financial plan. Maybe not understanding profitability versus revenue. Around 60% of small businesses aren't profitable. Hey, that might be peace of mind to some of you that are fighting for profit right now. And then the last one is that maybe there's no contingency plan or financial reserves. Now look, I don't think that we have to be financial experts, but we have to have some level of financial acumen and financial intelligence. And to help me navigate the discussion today, I have with me Stan Kleja. And Stan, he's a CPA. He's vice president of Bernice A. Schweiss, LLC. That might ring a bell to you as a listener because we have been promoting this organization during the month of March. But he has almost a decade of experience, but it seems like 30 to 40 years of experience. He excels at analyzing financial data. He is great at extracting meaningful information and developing creative strategies to empower businesses like mine to achieve their growth goals. He's he's very active in the accounting industry, a member of the American Institute of CPAs. You hear my passion in this and probably why the heartfelt introduction. Well, Stan is my CPA, and when I tell you this guy has saved me some crazy headaches, and the more I learned from him, the more I was passionate about getting him on the show so that you guys can borrow some of his experience. You know, they say it takes 10,000 hours to be an expert at anything. You're going to take Stan's 10,000 hours today and steal some of that wisdom from him. He's one of our greatest assets here at Jeff Hancher Enterprises. So Stan, without further ado, welcome to the show. Thanks for taking time to be with us.
Thanks for having me.
Yeah, it's been a long time coming. You know, we had Stan at our recent executive mastermind event, and the feedback was unbelievable. I think if we would have let that Q&A breathe out, especially when we got to the part of talking about taxes, we would have been there a while. And it got me thinking, like, hey, this might not be the bullseye for every listener, but there are people that are challenged, especially that startup business or that small to medium business that's trying to get this thing all figured out. But look, there's a human side of Stan too. And I don't know if I fully have heard this story, but the listener should know because I don't know if every CPA can hang their hat on this. You go from being a music major to a CPA. Now, you got to fill those gaps for us because rarely do you find like an expert, and I mean expert CPA that started the journey with a music degree. Like, talk to us through that a little bit. He's not your average CPA here, folks.
Yeah, so my undergrad's in music from Duquesne University. While I was there, I started working at a recording studio. And after I graduated from music school, I was at the studio. I started doing the books. It's a small business, so I started helping with the books, the invoicing, QuickBooks, everything. Kind of started to like that. So while I was working there, I went to school to get my MBA. And then my mother is a CPA, so then I started working for her at a firm, and I got my second master's degree, my MSA, and then I sat for the CPA exam and became a CPA. So kind of came to it from a different perspective, but yeah,
Yeah.
I liked working for that small business, and I kind of fell in love with small businesses from there, and now that's kind of our passion. Our whole business model is based around small businesses.
And I love it. And what a resource, because, you know, being a small business myself, I don't have the resources to pull somebody in full time and have a full time CPA, nor do I need one, quite frankly. We're just not there. But boy, do I need the help. And I'm telling Stan this. He knows better than anybody how much help I need because I just don't know. It's not my lane. Do I know enough to be dangerous? Can I talk to it? I can, but I'm not an expert. And I implore the entrepreneur or the aspiring entrepreneur, there's a couple pillars that you can't get wrong in launching a business. And maybe you've already launched and you're like, well, it's not too late. That was me. I mean, it wasn't like I wasn't doing anything, but I didn't find Stan until I was a couple years into the run. And thank goodness I found him when I did, because we found a lot of errors, a lot of opportunities to make corrections. But getting your financial strategy right out of the gate will increase your odds of winning. But let's talk about the losing. That's kind of what I started, with my introduction. Is most businesses they fail, and I think it's over half is what I've heard. Is it true, Stan, that half of businesses fail within the first 5 years?
Yeah, so it depends on if you're a glass half full or a glass half empty kind of person. But
Yeah.
51% of businesses generally statistically fail within the first 5 years. But that means 49% make it at least 5 years. So the longer you go, the higher your odds of going even longer, which is a good thing. So if you're out there 10 years in, 15 years in, you're much more likely to make it another 5, 10, 20 years. So
Why is that?
the biggest thing, like you mentioned, is cash flow. There's tons of different reasons you could have cash flow issues, but that is the main overarching issue. So whether it's your business plan maybe didn't make as much sense as you thought it did, maybe your margins aren't as strong as you thought they'd be, or maybe your target market isn't as big or isn't as responsive or is more difficult and expensive to reach. A lot of that nowadays, if you're getting into e-commerce, it's not just, hey, there's all these people out there that would buy my product. It's how expensive is it for you to pay for those Facebook ads, those TikTok ads to even be able to reach them, let alone convert that lead to a sale?
Mm.
So all of those different factors, you got to work with your marketing people, you got to get the statistical data, you got to build out a strong business model so that if it works the way you think it does, it will actually make money. Anywhere in there, you could run into issues.
Yeah, and I think for me, like, I can speak to this because I'm there. I remember my first year of business. I was talking to one of my mentors. His name is Lee Collin. He's been in my space doing this for 30 years. And here I am, year one. I'm excited, but I'm so frustrated. I really don't know what I'm doing. And he said, Jeff, no matter what, I don't care what you have to do. If you got to bleed, sweat your way there, get to 5 years. Get to the 5 year mark. And I said, Lee, what happens? What's the magic at the 5 year mark? He's like, well, there isn't any magic. He's like, but literally, your business really doesn't even start until the 5 year mark. He said, you spend the first 5 years failing, figuring out what not to do, understanding how the market's going to respond to your services, your product, your brand. Like, you just are going to be making mistakes and learning your first 5 years. Well, we just came into our 5 years. I still don't know what the heck I'm doing most days, but hey, guess what? The odds of success have went up. Making it to the 10 year mark now has gone up. Now we have another milestone to hit and to get there. But I mean, look, there might be an entrepreneur or aspiring entrepreneur that's looking at those stats and saying, man, at that kind of failure rate, should I even start? What would you say to that person that's battling the fear of starting? What will give them some peace of mind to see if they have a good go-to-market strategy?
Test it out would be one of those. If you could do without, if you're depending on your current financial situation, do you have kids? Do you have a mortgage? All those things. If you're younger and you have less overhead in your life, it's a good time to take a risk. You don't necessarily have to quit your job to start a small business. You can weekends, nights, especially if it's e-commerce, you don't necessarily need store hours. So can you test it out? If it is a store, can you do pop-ups on the weekends just to see what is the response rate? How well does it do? If you can sell it to your friends, that's a start. If your friends aren't buying it and your family isn't buying it, it's kind of like, okay, I'm not sure. If you can talk to somebody in the industry, that's always a good first step, regardless of if you're testing it out or just kind of getting ideas. There's lots of industry specific niches, information, things that from the outside you're not necessarily aware of. I know you're learning a lot about the publishing industry at the moment and just all those things you didn't know. So you never know what you don't know, basically.
Man, isn't that the truth? We had a gentleman on here, I think it was our first season of the show, who wrote a book called Third Shift Entrepreneur. And it's right in the heart of what you're saying, Stan. Of you don't have to jump off the cliff and hope the parachute opens. Like we hear those cool stories and they're trendy and sexy, but it doesn't have to be all that pressure. It doesn't have to be YOLO. Like you can start a business on the side. I accidentally launched a company. Literally. I mean, it sounds funny to say, but it was on accident. Like I didn't intend. I fully was bought into the fact and knew I was going to retire from Cintas. Like this is the company I love. Life is good. I'm promotable. I got runway left. Why would I ever leave all of this? Well, I started a podcast for the sole purpose of paying it forward and serving people. Well, that was my side hustle, if you will. I started a podcast. Little did I know that people wanted to hear what I had to say. The market responded. And people started asking, listeners, do you do coaching? Do you do training? I started doing that on the weekends and in the gaps of very little time that I had. And then came some fulfillment. So testing the market is what I did. Maybe you want to open an apple pie company. Well, maybe you should put an apple pie in the county fair and see if you win the blue ribbon before you go launching an apple pie company. But let's get back to the failure, because I think if we know what are the common reasons people fail, we can begin to safeguard those. So maybe talk through what are some of the common reasons for the failures, in the first 5 years for new and existing businesses. What are you seeing, Stan?
So my biggest thing is modeling out from a financial perspective, choices, decisions, and business plan that you're making. So you know if it does what you think, what are the actual financial outcomes. A lot of people come to me and they're like, I want to do $1 million next year. And they don't think about, well, what are your margins? Maybe that cost of goods is a lot higher than you think. So you're only making 10%, but then you have this much overhead. So it's like, great, you're going to work X amount of hours, do this thing. It's going to be really hard. You'll bring in $1 million. And at the end of the year, you'll have a nice $50,000 left over. How's that sound for all of your hard work? And then they go, oh, I don't want to quit my nice job where I have a 401k and benefits and this nice big salary to make $50,000 a year. So that's where you have to kind of decide, run the numbers, get a range. If it doesn't go well, where are you at? If it does really well, where are you at? How acceptable is that area of operations for you? That's whether it's a new decision within your existing business, or I'm a startup. I was doing some things on the weekend. Now I'm looking to go give my resignation, make that big step and make it work for real, knowing what you're working within. Because a lot of times what you think it is not, from an outside perspective, from a just rough numbers perspective, isn't necessarily what it actually ends up being. And that's where speaking with someone that has some expertise or is in the financial CPA tax world, you can talk to them about okay, you're paying wages, but did you think about benefits? Did you think about payroll taxes? Did you think about workers' comp insurance? Now, instead of paying someone $10 an hour, that price needs to be modeled out at something higher, 12, 13, $14 an hour, depending on benefits and everything. That alone
Yeah.
can drastically change your overhead. All of a sudden, it's like, oh, it's my overhead's 5, 10, 20% higher than I thought. That was my whole profit margin. Now I'm not making any money. So those are the types
Yeah.
of things you want to make sure, whether it's hiring that next person, do I buy this building? Do I lease this building? Is this the right price for my product? All those types of things it's all a web of connected decisions.
And these are conversations we have all the time, Stan and I, to get that outsider perspective. And what you're talking about here is having a clear business plan. And here's my little heartburn with a business plan, because I'm inside companies. I am the guy people call. I'm thinking about launching a business, Jeff. I want to know what your thoughts are on it. And I'll always ask people, well, have you built a business plan? And we're living in a world of chat GPT where people can go in there and say, create a business plan for me, enter, and boom, there it is. And now they can parade this business plan around as a banner of due diligence. And we're not talking about a document on file here. Now look, I'm glad that you're making the effort to do that, but this is a caution that I see a lot of people do. We don't want just a document on file. We want a usable guide. And so, Stan, how do they go to ensure that the plan that they put together on ChatGPT is actually going to work?
Yeah, breaking down the various sections of your business plan. For example, I had a client that is in retail. They were moving into an area where their specific niche product they were selling didn't exist. There weren't any other shops selling their products. So they came in with the business plan. We're going high prices, we're going high level of service, and we're giving you that high level of experience. So they didn't have sale bins, they didn't have buy one get one free sales. It was, this is the price, it's a quality product. Let's bring those people in here. A year and a half into them being there, two other shops opened up within walking distance of their shop. And they're coming in with the buy one, get one free. We got this discount price bin on the way out, and they're eating into their customers and their revenue. So now that business plan they had was an actual document. They were actually using it. They had to completely rewrite the whole thing to compete with this other company because it wasn't working. They were priced too high. Now there was a competitor, so they had to shift everything. Instead of their business plan saying we're high level of service, high level products, now it's we're mid level. We have some of that high level stuff, but we also have the discount bin. We also are going to start doing sales. We're going to try and compete not directly with what they're doing, but to bring back some of those people so they don't go, well, that guy's 10% less. I'll just go 50 feet down the street here and buy it from him. So if you're not using your business plan, you know it's probably not a good business plan. If you're not thinking, oh, I need to make this decision, what does my business plan say, and referencing that in some way, then you might want to revisit it, unless it's just that fresh in your head. If that's just, if it your whole business plan is who you are and what your business is, you might not need to actually look at it, but you should be referencing that same information.
So good. I'm thinking of clients that I have, and I would say this is the majority of startups, is they're very good at the product or service that they want to build a business around. But I would say that the majority of them lack these skills that we're talking about. And so, they have the best apple pie in the world. Everybody tells them that. They've tested it at the county fair, and they launch. And they launch forgetting about cost of goods. They launch forgetting about labor as a percent of total revenue and all the things that come with building and scaling a business. And I would say, and I'd love to hear your thoughts on this, Stan, is the whole cash flow thing. When you don't have a plan, cash flow can become very, very compromised. And I see this as a heavyweight knockout punch, is this whole cash flow piece, mismanaging, the daily flow of cash. What are you seeing with this, and how can people prevent that mistake from happening?
Yeah, so finding where the potential issues in the future of your cash flow are going to be for your particular situation and business plan. A lot of startups run into, I have a solid business plan, my business is going to make money, not factoring in that they personally need a certain amount of money to live. So knowing before you really dive into something like that from a startup or from making a big business decision that's going to change the functionality of your business or the financial situation of your business, knowing how much money you need to live personally every month or every year is going to help you set those guide rails again of where you're operating within. If you need $50,000 a year, then you know your business needs to make at least $50,000 a year. If you need $300,000 a year, you might have a sound business with a great business plan making $200,000 a year, but it's not going to work for you. So aligning your personal needs with your business is kind of a starting place for a lot of people. That's where I see people coming in saying, I need to go get this business loan because my business needs it. When in actuality, their business doesn't need it. They need it to live personally. So having another source of income, having a savings that'll get used to a certain period of time that you're willing to deplete to try and make the dream happen, those things are all going to help you with cash
Yeah.
flow.
And I would say this is another great reason to have an expert by your side, which Stan has been for me, is because as we launch these companies and scale our businesses, there is an emotional, personal side to all of this, which is like, I still have a mortgage to pay. I still have kids in college. You're looking at, the business bank account. You're taking distributions. The business looks unhealthy because you're taking too much. and this constant balancing act of all of that. When you have an outsider, not that Stan doesn't care about my personal life, but a lot less than I do. And so here comes the voice of reason and a level of wisdom that comes with that. And there's a lot of investing to do. There's a lot of money going out when you launch a company. But I will tell you all this, do not underinvest in a great CPA to help you launch. And a CPA and a bookkeeper are not the same. I'm not talking about somebody that's going to help you be compliant with filing taxes. That's a whole nother conversation. I'm talking about somebody that can act as, a CFO and help you guide the business in a healthy way. The other area I wanted to ask you that I have personally been challenged with, I know many of my clients that is also a potential watch out blind spot, is the pacing of the business. Where the company launches, it's the Shark Tank effect, if you will. You get the deal on Shark Tank and it explodes your website, it explodes logistics. You're just growing too fast. Or the other problem, which is you're not growing at all. And these are all interrelated, but it leads to this question that I have, Stan, which is, for that person listening that maybe is challenged with this, how do you balance reinvesting in your business versus keeping cash reserves? Which is something I've been challenged with. Is like, how much money do I keep back? Do I invest it in the book launch? I don't know if there's an exact formula, but any advice you have on that?
That's where the modeling comes back into play. So you could build those guide rails, that area of operation that you know you're working within. So if you know personally you need, and what's the minimum amount you need, that's kind of sets your floor. You don't want to do anything that's going to risk not being able to make that much money. Most people will keep at least a month's cash flow for their business. With the pandemic, those got real, people realized they needed potentially a lot more cash reserves depending on the situation. So it's your risk tolerance, it's how conservative you want to be as far as that is concerned. Investing in smart decisions where you could easily get your money back, or iterative decision making where maybe you don't hire that full-time person that's going to cost you a huge amount of money. Maybe you hire someone part-time, pay them hourly, kind of work into building them up where possible. Maybe you don't buy the building, you lease the building, or you get a smaller space, or you share space with somebody else. Those types of things, if you're not sure. And the earlier you are in your business, the less historical data you have to work with to know how things are working. That's where you want to be more careful. As you have 5, 10, 20 years of experience and you know, hey, in this situation, we did this was the result. You have a lot more data to analyze and be able to project with that isn't just your personal, maybe too optimistic feeling about how something might end up working. So it's honestly, it's a personal choice, but if you're not at least a little bit into risk, owning a business is probably not the place you want
Hmm.
to be, because it never ends. It's always, I'm going to start up and then I'm going to quit my job and then I need to hire somebody and then I need to hire another person. And there's never a situation where you're just like not doing something that has some aspect of risk to it. And it's always new. It's always a new thing to figure out.
That might be the best advice that the listener is going to get out of this entire episode, which is like, if you're not ready to take on some risk, don't take this leap. Like, just when you start feeling comfortable, I mean, you go write a book and launch it with Maxwell Publishing, and then, oh my gosh, I didn't know all the costs. What are we going to do? Are we going to dip into our personal savings? Like, it's another white knuckled moment that happens. And so we're talking about like top reasons why new businesses fail, but let's pivot a little bit, Stan, and talk about, that listener that's listening today and they're saying, I'm glad that's not me. Man, cash reserves are great. Our cash flow is good. Our margins look good. What are some of the key financial aspects that successful businesses often underestimate or overlook? What are those blind spots for them?
Pricing is one of them.
Okay.
It looks good today. What about tomorrow? Like we were talking about with my retail client earlier, are you in tune with the market in the area? Maybe those other shops wouldn't have come into the area if he had more competitive pricing, because they would have modeled it out and been like, well, this guy's already has these competitive pricing. We can't go even lower than that, so we're never going to get clients from him. That would have maybe been a little bit of a preventative strategy. So he wouldn't have made as much money in the time, but he would have prevented them potentially from coming into the area and then costing him money in the long run. So those longer looks, it's not just a year, it's 3 years, it's 5 years. Where are you going? How are you defending against industry competition? How are you adapting to change? Someone comes in and AI today just can completely replace an industry or a service or a product and make it much less expensive for someone to make. And if you're not up on that and someone comes in and that thing you were doing is now 50% less down the street because of AI, what are you going to do? Do you have a plan B? Do you have a plan C? How are you going to pivot? So the first step of that is being aware and staying on top of everything.
Yeah. Yeah, I think too, like thinking, I'm not saying we have arrived. We got a long way to go. But thinking about the successful business or the one that's, I don't know, getting some footing, is taking the bait of expanding beyond what they should. Adding the new product line and not focusing on the lane that they should be in. Do you see this with successful businesses where they feel like they've arrived, so they gotta, add on a service or a product? What's the risk with this?
Yeah, so your standard entrepreneur is likes to take risk. So as soon as things start to get kind of calm and it's like, oh, things are going well, they are looking a lot of times for that next risk. Where's the next thing I can go after? Or my growth when I was going from nothing to 100,000, that's a crazy
Mm,
amount of growth. And then 100 to a million, that's 10 times the growth. Then a million to 5 million, oh, that was only five times. I'm growing slower. And then 5 to 7, oh, I'm growing even slower. So they want that 10 times growth and then 20 times growth and then 40 times growth a lot of times. So that's where you have to be careful and model it out. Do you really want that, or does that not make a lot of sense? Because depending on your business model, there's periods of time where businesses aren't as profitable based on volume and other economic factors. So you want to be careful just because things are working really well here and you're going to this next level of 10 times the number of sales or something, you might need different distributors, you might need different overhead. That's going to change the profitability of your business model. Are you factoring all that in, or are you going through a period of like from 5 to 10 million in revenue? We might not make any more money, but we need to get past 10 million, and that's where all the magic happens, depending on your industry and things like that. Do you have the cash flow to get there? Where's that capital coming from? All those things will play into it. So
yes, man, that's so true. And I have touched that stove. One of my mentors, early on, he was asking me about what is it that I do and what are my product lines. I again accidentally started a HR side business. And the only reason I did was all of my clients would ask, for, hey, do you know anybody that can get us a policy on this? Or I gotta, put somebody on a performance plan. Do you have one? We need to terminate somebody. Do you have a resignation letter? Like all of these things were coming, and I'm like, I'm not going to pass this opportunity up. So I pulled in some 1099 HR people, and we just started shooting off invoices. And when I met my lawyer, Rocco, who we both know from Koza Law Firm, he's like, Jeff, this is so far outside of your model. And by the way, it's carrying a ton of liability. And it was this moment of just because you can doesn't mean that you should. Stan broke my heart one day because he told me I needed to take my merch shop down. I mean, here I was trying to sell, water tumblers and, all the things, which I thought were amazing. But the reality was that wasn't my lane. I was breaking every tax law that there was. We've corrected them. So if you send this episode to the IRS, we're all good. Stan's got us all straightened out. But like, I didn't know. I wasn't even thinking about any of these things. I just saw dollar signs. But what happened was it left my business so fragmented. And it sounds like you're seeing this with some businesses as well.
yeah, that's back to the business plan. That's where if you're an excitable entrepreneur that's just looking to do things and you're good at running and growing a business, there's almost no lane you can't operate in. Do you want to sell toothbrushes? Do you want to cut people's hair, whatever you can get people to do. If you're good at growing and running a business, you can do it. So you have to help keep yourself on track, where I set this particular business up to do this particular thing and build it around there. Because as soon as you start veering off, you probably don't have the foundation that you would need to do that particular thing. And you're kind of floating out there in the wind where it might be okay for a little bit, but then it's going to fall out from under you. So keeping everything straight ahead.
The other thing I think it does is it solidifies your brand. We don't want to be in most cases this catch-all for all things. Like I can't just say I'm a business consultant. Gosh, that covers HR, marketing. Like I'm not good at, I got like one lane that I need to run in and just be great at that one thing. And by the way, aren't the most successful people that we know, isn't that kind of what they do? Like if we ask you, what is Warren Buffett known for? Everybody knows. Steve Jobs, everybody knows. Like you can go down this list. So there's something to be said about that. Any other blind spots before we go on? Because I got a question I've been dying to ask. But any other blind spots that you see, whether it's the startup or whether it's the successful business and they didn't see this one coming?
Kind of what we were just talking about. What's the one thing that makes you the most money, regardless of product or service or how big or how small? You got to have one thing that makes you more money than all the other things you do or sell. Could you imagine your business if you only did that one thing? Would you make more money? Would you grow faster? Would you have better brand recognition? That's something that I don't think gets visited or revisited after you've started your business enough. We did a few years ago, we just did all taxes for anybody. And it was you had trusts, you had estates, you had people, you had businesses. And when we looked at it and modeled it out, we were doing too many things. You started to grow too much and have to build too many different foundations with different processes. So scaling it down to just one lane where we just work with businesses and business owners allowed us to grow much faster and have a better process and a better product for everybody. So that's something to think about, even if it doesn't make sense at the time or at the moment or ever. It's still revisiting that. Or does it make sense to spin off that business where, hey, we do have two things and the second thing isn't as profitable, but it's still really good? Do you need two different teams then, so people aren't working back and forth and getting pulled in different directions? So that just focus all the way from the owner all the way down the hierarchy to everybody is a good thing to keep an eye on.
Great advice. I mean, look, when I stopped doing the HR thing, short term pain, because it's all this revenue that I'm literally just shutting the valve off. So short term, it was horrible. But looking back now, what it has allowed me to do is focus on the things that I'm best at and have the biggest competitive advantage. I had no business doing this HR stuff, if I'm being honest. But I have a very important question, Stan, which is when do you think we're going to be ready to launch this merch shop again? I feel like the people want the JHE merch.
Uh,
I
with
mean,
the- with the
any
book now,
indicator.
you have your way into making that happen. So you have a foundation of profitability through selling the book that you can now stack on additional things that are more in line with what you're doing for that vertical.
There you go. So, hey, you heard it here first. There's a chance. The CPA is saying maybe the chip clips are coming back soon. So, we'll have a major unveiling and ribbon cutting whenever we get the cell phone chargers with the JH logo on them. Just so stay tuned. But definitely was not the time. We had butchered that and had no business running a merch shop because we weren't even fully established. I was just seeing ways to get little nuggets of revenue, but thank goodness for Stan's wisdom of shutting that down. So maybe ask yourself, listener, if you are on the journey and you're thinking about a product launch, why? Just because you can doesn't mean that you should. Is the market responding? Have you become an expert and do you have a brand around the current products that you have? These are maybe questions to ask. But you touched on it earlier, and again, I'm going to ask you another question that's like there's no great answer, but I think you're going to have some wisdom on it, and it's one that I talk to people about a lot, which is pricing. What advice do you have for that person that's listening that's like, man, is my prices right? Should I lower my price? Should it be higher? Should I be the loss leader and go after volume? Should I be the Ritz Carlton of my industry and charge the most? What advice do you have for pricing products and services?
So that's back to your business plan. What did you set out to do? Like my retail client set out to do one thing and ended up pivoting to another, but it was a conscious decision that affected everything across the business. So when you set up your business plan, which one of those are you doing? And there's strategies within pricing where you can evaluate your price based on industry standards. What does everybody else do? What do your competitors do in your area? Don't just look at like across the pond or across the over in California, what are they doing compared to here in PA? Those aren't going to be comparable. But what are people
Sure.
doing in this area? Or if it's e-commerce and other e-commerce competitors. Other than that, it's going to be your business plan. What's your overhead? What's your cost of goods? A lot of time you go through those things, people say, I'm not making money. And it's like, well, here's your overhead. What are you cutting? They say, I can't cut anything. Okay, here's your
Mhm.
cost of goods. What can you cut here? Can you get quantity discounts? No, no, this is it. I can't cut anything. Then you either need to sell more if quantity fixes it or raise your prices. And then if you say, well, the industry won't let me raise my price, then we know your business plan isn't working. And unfortunately, modeling is only so good. Real life will kind of dictate to you what's going on. So that's where a lot of people say they can't cut things, and really they mean I don't want to, or I don't know what
Mhm.
that would look like. It's not necessarily a can't. So, but yeah, cost plus is another way where you could say, here's all my costs. I want to add in my profit margin. A lot of, if you have people, repair people, HVAC, plumbing, a lot of those types of contracts are built that way. The value pricing is another way. It's not necessarily how much it costs you. This is a lot better for services, is what does it provide your customer? How much is it worth to your customer to have that thing just handled? Then you could
Yeah.
come in with a lot of it's kind of a little bit of industry, but then testing out your client ability to raise those costs. If you have a big pipeline, this is another kind of gauge for existing businesses. That pipeline's getting bigger and bigger and bigger, and you're scheduling further and further and further out, or your lead time on your products coming in is further and further and further out. Raise those prices until it starts shrinking and pick a place where you're okay. I want to be scheduled 2 months out, and that's where I'm good. So adjust your prices accordingly. It could even be seasonally, depending on what you're doing, to maintain that pipeline around where you would want it to. That's another kind of real-time way to gauge it. And then there's strategies around pricing if you're trying to accomplish something for a short period of time. Like the retail example, penetration pricing is where those people come in, they're going to be lower, they're going to price it out to try and bring the customers in, and then they're going to raise their prices back up. Or they'll do big sales to kind of make it seem like their price is lower. They get that customer base and then they raise their prices up. So there's different strategies behind it too. You don't just have to commit to one. You could do things for small periods of time. You got the subscription. You've got bundling if you're selling your merch,
Oh yeah.
buy two things in a bundle for a lower price, so you get the quantity sale over the higher profit margin. But all that's going to be based on that business plan. If your target customer is cost is their first priority is how much things cost, that's going to change your approach to pricing. If your customer is a very wealthy individual and that's your target customer, they're going to be less concerned with small, oh, I save a little bit here, a little bit there. They're going to be looking for that big overall, what's the value kind of deal. And that's where you can get into the psychology of it. That's a little outside my expertise, but there's so much you could go into there.
Yeah, consumer behavior, competitive advantage, what kind of value are you bringing to the table? But I think there are metrics. I have a client that's in the service-based industry, and they do remodeling and bathroom remodels, things like that. And her big concern, as I was doing some coaching with her, was how far out their lead times were, and customers were getting frustrated they had to wait so long. And so I asked the question, I said, tell me about your sales close rate, meaning out of 4 proposals that you deliver, what's your closing percentage? And she said, it's around 40 to 45%. So I have a 45% close rate with customers waiting 8 to 10 weeks to even have their project begin. To me, this is a no-brainer. We got to raise the price. We raise the price, which means our closing rate's going to go down to maybe 25%. Our lead time's going to go down to like 6 weeks, and our profit's going to go up. And that's a good pivot. Like, that's a great model. You have to overcome a little bit of fear because we've never charged this much before. But I want to ask your thoughts on this, Stan, because this happened recently, and there was a moment of panic. People didn't know what to do, and we go through these inflationary times where it's not a trend. It's probably not here to stay, but we see this massive spike in inflation. How do we navigate that storm as a business when inflation may drop back down and we're in this moment of time? Any advice for that?
Stay on top of it and model it out. It depends on your industry. Construction really, really sees that a lot. If you're buying a lot of materials and it takes a longer period of time for you to complete a project, you have to factor in your contracts, this is the price plus escalation if lumber is over a certain amount. You could build that in and just educate your customers so they don't feel slighted when the price ends up being a lot more, that hey, we just don't have control and it's crazy right now. It could be 10-20% more than what we're thinking, kind of deal. Other
Yeah.
than that, revisiting it, because of inflation generally has been trending up. It might not be as aggressive in a certain year, but inflation generally trends up. So revisiting it every year so you at least pace with that standard inflation level so you don't get 3 years in and the value of your service is suddenly 3 years behind the inflation rate. Then it's hard to go, instead of 3% a year, now you're trying to go 9 to 10%. That's a bigger jump for your customers rather than, hey, every year we look at what our costs are. If you don't have a lot of material costs, it's going to be labor. Depending on what labor is doing and how hard it is to retain and get talent, your wages might be going up, so your prices should come up too. It's
Mm-hmm.
you can't, restaurants really got hit with the pandemic. They all of a sudden, the ones that could still do the takeout and the delivery had skyrocketing profits and their costs went down because they didn't need in people working at the restaurants anymore. It was just the cooks and the preps type of labor. Their revenue went way up, and then as soon as things opened back up, they couldn't find people. So now they were used to that high level of revenue. The revenue tanks. Their costs need to go up because they're paying more for servers and more for hostesses, and they didn't adjust their prices because they were making a lot of money. So
Yeah.
it's hard to say, hey, customer, I haven't raised your prices in 5 years. I'm going to do a 20% increase now,
Good luck.
versus, hey, it's 3%. It's not a lot. Cup of coffee a month, we're just keeping up with our costs going up. That's easier for people to digest.
Yeah, and you may lose customers with price increases. I would say you're probably going to, no matter what. But you got to look at the overall health of the business when you're looking at that. There were times, even in my corporate career, that we would do kind of a keystroke price increase, knowing we're going to lose, X percent of our customer base. But this increase that is going to stick is going to far 10x the revenue that we're going to lose by customers that are just mad they're getting an increase. And we
Yeah.
got to look at that at all times.
Depending on your industry, a lot of times those customers are going to be not the value approach customers. So they're going to
Right.
be causing potentially other issues for you, nickel and diming, asking a lot of questions, taking up a lot of your salespeople's time. Whereas those people that are sticking around understand the value, understand the process, are
Great
more
way to weed them
appreciative.
out.
Yeah. So you can
Yeah.
also, you could look at like your bottom labor performance and your bottom customer performance and see, well, if I got rid of both of those, your business could potentially either be the same or better, and you cut having to manage a person too, or a few
Yeah, you might be
people.
weeding out some bad customers along the way as well, which is fantastic. I got two more areas that I want to run by you in this episode, and one is the subject of debt. This comes up all the time. Some people look at debt and they see it as the enemy. They don't want debt. They don't want to take on debt. Then you have the whole other side, which is I'll take on all the debt because I see value in the future and you can't stop me. Like I'll take it. I'll take all the loans and just feed the machine. What talk to us about good debt and bad debt. What's the difference?
Yeah, debt's a tool. I talk to lots of different people from lots of different economic backgrounds. Some people have never had a credit card, they never had a loan, they watched their parents lose the house and not know how to deal with debt, so they're completely debt averse. They don't know what to do with it. And you got people on the other side, like you said, that are just living their whole life on debt, everything, their whole house. They're living paycheck to paycheck, even if they're making a lot of money, and it's all just credit cards and car loans and home loans. So you want to be careful with how you use it, but no, it is just a tool. It's not necessarily something to be afraid of. It's just like a saw blade. You want to be careful where you put your hands when you're using it, is all. Make sure you turn it off when you're done, kind of deal. So if you're making a business decision that requires some capital up front, but you have reason to believe that on the other end of that, you're going to be making more money, that's generally a good time to use debt. So if you're asking yourself, I'm starting this business. I was thinking about going to get a loan. One of the ways you can decide if it's worth it or not is model out. You get the money, you invest the money, you are paying off the debt. At the end of you paying off the debt, are you in a better place than when you started with the debt? That's where it can help you answer, okay, I get that $10,000 loan today so I can go buy a bunch of my books so that I can sell them at my next conference. Then you make the money back because you know I'm going to a conference. These are a bunch of new people that have probably never bought a book before. They're going to buy these books. That's going to be great for you. You don't want to use debt where it's like, I need money to live and my business isn't making enough and I don't necessarily have a plan to make any more, but I need to get through the week, so I'm going to go get a loan for
Hmm.
$10,000. Usually those loans are not given to you by a bank that will work with you and give you good rates. They're given to you by more aggressive lenders that are looking to take a lot of your cash flow in the future and very quickly, so that 2 weeks later you're like, uh-oh, I'm in a worse position. So now I need to go get another loan. And unfortunately, I
Mhm.
get clients where they're 3, 4 loans deep into this spiral of getting a loan to pay for the other loan because they needed money to begin with. That's where you want to know when to stop and just talk to a bankruptcy attorney or whatever, friends and family, whatever you need to do to get out of that spiral. Something else isn't working. That's just a tool. It's not something to float through.
Yeah, it's
So,
not a crutch.
yeah. So that's the short version is if you're in a better place after it because you were able to hire somebody and that somebody can go sell more of your things or bring in more customers or provide more services, or if you needed physical assets where I'm in construction, if I go buy a dump truck, now I can do hauling loads once a
Yeah.
week. That's going to generate this much income. The truck secures the loan. So worst case scenario, you can give the truck back, walk away, kind of deal. Having options is the better way to go. Where lines of credit, you can use them, you can not use them, you can pay them down longer, slower. You don't want to be locked into some of these online loans where we're going to take 20% of your receivables until you pay this loan off. So every time someone swipes a credit card to buy your thing, 20% of that's going to pay the loan. So now all of a sudden your cash flow used to be 5, 10%. Now it's 20% less. You're in a negative. So if you get that money up front, great. But then for the next period of you paying that loan off, you have issues.
Yeah, I'm in it right now, and it's resonating with me. The book launch. First time author. I don't know what I'm getting into exactly, but they're forecasting X amount of books that need to be sold, but it could be more, it might be less. So then they come to me and they ask me, well, how many books do you want to pay to have printed at X amount per book to have them printed? And when you start getting up into like 7, 8,000 books times what it costs to print them, I'm like, oh my gosh, I don't know if I want to pay that kind of money to have that many books printed. And then here comes the epiphany from the publisher, and they said, well, whatever you decide we'll do, but I think you need to know this. If you don't have books printed, you can't sell them. And I'm like, well, there you have it. So this could be some good debt, meaning I'm not going to see the benefit of this debt right away, but eventually I'm going to sell these books. I mean, that's the hope, that's the goal, right? Is sell the books, you get a profit. If I'm a car dealership and I have a Lamborghini with 5,000 miles on it, and somebody wants to sell it to me for 50 grand, I know I can sell this car for deep six figures, but I don't have 50 grand. So you know what I'm doing? I'm going to go get it because I know I can sell this car. That's good debt. So I think not being so afraid of debt that it cripples you, but being wise enough to know that it's not a vending machine is kind of, I think what I'm hearing you say, Stan.
Yeah, that's about it. You get some tax benefits for business debt when you're using it for business purposes by being able to deduct the interest. Um,
Yeah.
you just want to, the biggest thing is it can change your cash flow because now your profit is one number that's different from your cash flow. And a lot of startups think about cash as their profit, and it's not necessarily the same thing.
Man, that's another good point of why you need an expert. I remember when we were building our studio, I just simply told Stan, he asked good questions. So, what's going on? Anything new? What should I know about? How's the business? And I'm like, oh, yeah, we're building a new studio. He's like, oh, wait. If it reaches this threshold of an expense, you can amortize that or depreciate it. I can't remember.
Appreciate.
Uh, yeah, you can depreciate that over time. And I'm like, oh, wow. So now I had a goal. Like maybe instead of skimping on an area, go a little more. Let's get to the threshold. Let's build a nice studio and we can depreciate it. Not bad debt, right? Because it's something that we need. And now there's thresholds. So the moment that everybody's been waiting for, Stan. I mean, this is what the people came for, and this is gonna revolutionize people's businesses, and it's what the people want to know, Stan. Give us all the tax hacks. Tell us, how do we save on taxes? Isn't that what everybody wants to know from a guy like you? Like, how do
Yeah.
we save on all the what are all the hacks, the RS hacks that we need to know about?
Yeah, so that's where I always back people up a little bit. You get too excited. What there's people out there that'll push certain tax strategies, some more aggressive than others. That's not what we do. We want to help you run an efficient business, an effective business, a profitable, wealth building business. Taxes are a part of that, but they are not necessarily the goal. If your goal is just to save on taxes, what about making money? Would you prefer to make no money but save on taxes? That's where you have to check your priorities. So some general things though that you can look into is something called an S election. You'll probably, if you're on the TikTok or out there on the internet researching things, that'll come across your feed at some point. That's where if you're active in the business, you can make an S election for your business to now be treated as a corporation. One of the benefits of this is you can shelter some of the money that you get paid from self-employment tax. It depends on what you were originally formed as, what you're coming from, how much money you're making, if you already have payroll or not. There's a lot of different factors. There's reasons you wouldn't want to do that, but that's one of the things if you haven't discussed with your tax preparer, at least ask them, say, hey, is this something I should be looking into? Is this something we should be doing? Does it benefit me or not? That's it's called an S election. Um, the 199A has been a big tax planning tool for the last since 2018 that currently will expire at the end of this year unless it gets changed or extended. That is where you can save or deduct 20% of your business income on your personal tax return if you have certain types of businesses and business income. And there's different rules around how much wages you need to have to get that deduction or how much property you can have and if you can aggregate businesses together. I was just doing a tax return for a client where I looked at it and they didn't have an aggregate. I clicked a few buttons and now we aggregated some of their businesses together and they saved a couple thousand more in taxes. So it's a little thing that if you're going to H&R Block, nothing against them or these average kind of on the street corner tax preparers, they might not be asking you if you want to aggregate. They're just putting the information in and giving you the tax return. So that's where having a discussion about, hey, these two businesses, they're related. We could potentially get a higher deduction, but you need to elect to do this. Do you want to do that? You say yes, and then we do it, and now you save a little bit of money. So that's where having a discussion with a tax preparer, hopefully more often than once a year, but at least once a year, you should discuss with them so they can maybe throw some of these things out there is going to be helpful. Beyond that, there's a lot of little things. The compliance around doing them correctly is tedious and a lot of people don't necessarily want to keep that level of records. So you want to be careful with the Augusta rule is one of those. What your auto use policy for your vehicle, is it owned by your business? Is it owned by you personally? There's so much nuance to all of that depending on your specific situation, how your business is formed and organized, what tax elections you've made. that any advice you're potentially just taking from the general internet, probably more likely than not doesn't apply to you, just
Yes.
because there's so much nuance in there. So making sure you speak with a professional about, they know what your situation is, they can help guide you for your situation if that particular strategy is good for you or not, is a good thing to start doing.
Well said, Stan. And I mean, I think what you opened with, which was like, did you start a company for write-offs or for
And
profits?
maybe you did. Maybe that's the reason you
Maybe
started your
you did.
company. That is,
Yes. Yeah, yeah. I mean, look, to each their own, I guess. But I think also another thing that you said is meet with your tax preparer more than once a year. And again, I'm not slamming any bookkeepers or anything like that, but I've been down that road where you show up with the shoebox full of receipts and throw it on this desk, and all they're really trying to do, a lot of those people, is get you compliant and get the return in. That's it. But if you're in a business and hopefully one that you want to scale. I don't know how often we talk, Stan, but it's a lot. And, people on my team talk to you way more than even I do. But, we're in a lot of communication because what I have found in my communication with you is the strategy literally changes throughout the year of what distribution should I be taking, payroll decisions that we need to make, taxes, where are we trending with that so that we don't have a big surprise at the end of the year? Should we be paying more into taxes? We even have looked at and talked about pulling in retirement type stuff as a way to move the money, if you will. There's just so much, and it ebbs and flows throughout the year, literally based off of profit and cash and revenue that's coming in. So, what would you say to that as far as the person that's maybe not doing that currently? What should they be looking at?
Yeah. It's, if you can, there's obviously a cost to everything. So if it's not in the budget, try and make room in the budget or try and get the budget to grow so that there is room at some point in the future. You mentioned the investment side of things with retirement accounts and stuff. Having a meeting even once a year between your accountant, your investment person, your legal person, a lot of these things are interconnected. It's not just I'm doing this for taxes and my attorney doesn't need to know, or vice versa. Things are all connected. So having that cross communication between people so that you can stay on top of things, and the people that know what you don't know can talk to each other about what's happening. That's that's going to save you a lot of problems in the long run. We when we get a new client, I'm surprised if there aren't problems that we have to
Yes.
go fix.
Oh
I was
my.
just I was just onboarding someone today. We thought we were just setting up a new payroll account, would get everything ready, and the more questions I asked, it was there was some problems with the name, there was some problems with the address. There was problems with how the tax returns were filed in previous years. And the more questions I asked, the more we were going further back in time to find more and more things. We're just making a list. Okay, we're going to have to work on all this stuff. So finding a good professional, having a good team to work with, whether internally or externally for those things, it all they all talk to each other. When you file a tax return, your operating agreement or your partnership agreement dictates things we have to put on the tax return.
Hmm.
You can't just say this is what's happening. If you have partners and you've legally agreed to operate in a certain way as far as capital is concerned or distributions of profits, that's what we do on the tax return. So if you're over here doing something different, now it's like, well, your legal document says this, that's what we should do. That's not what you were doing. So people end up with legal documents that do one thing, real life they're doing something else, and then their tax returns something different. Ideally, we're aligning all those things so you're operating correctly and efficiently and legally and compliant with all the tax laws.
So important.
Yeah.
You don't want to build a great business to find out you've been doing this wrong all along. You're one IRS audit away from a really bad day. And I mean, Stan, we've been on this journey now for almost 2 years, I think, maybe a little longer. I don't even know how long it's been, but it's been a while. And even as recent as last week, we found a prior issue from years
Yeah,
ago and
you
how we
guys got to
filed.
you guys got to notice the IRS is behind. They're years behind. So on certain things. Just because you've been okay for a few years, unfortunately, doesn't mean everything's okay.
Yeah.
Um, yeah,
So the point is like get the expert, and if you feel like everything's okay, have an outside party audit it. I thought everything was okay for a long time, and I mean, look, bringing Stan into our business at first, it was just like, did we do anything right? And there was a lot to clean up, but now it's a trickle, which is nice. You know, it's not as catastrophic as it once was. Anything else that you would like to tell the listener, maybe that I didn't ask or we didn't get to?
just on that last point, if you're paying a professional to do something, make sure you know what they're doing. A lot of people assume their tax preparer is doing a lot more. So it's not a knock on your a prior tax preparer not doing something right. Maybe you didn't ask them to do it. As far as they're concerned, you're paying them to do a tax return. You're not paying them to provide advice. You're not paying them to audit the information you're giving them. They're just putting those numbers you gave them onto the tax return and filing it. And that is, as far as a lot of tax firms are concerned, what you're paying them to do. I think a lot of miscommunication between tax firms and tax filers is that concept. They think you are my CFO. You are going to tell me if I'm doing something wrong. You are going to fix errors. That's not, in a lot of cases, for the average tax preparer, what you're paying them to do. You're paying them to
Right.
file the tax return with the information you are providing them. They're not checking it. They're not seeing what information might be missing. They're just, okay, here you go. Here's your tax return based on that information. So it's kind of like if you're a cook and I bring you a few ingredients and say, make me a 10-course meal, and you're like, oh, I only have three things to work with. You're going to eat a lot of the same thing. It's not going to be great. So,
Yeah. Help them out.
yeah.
So, do you practice all over the United States?
Yeah. So we have clients all over the country. Um, if there's certain areas that have a specific nuanced thing that we might not know about, we could contract that out. But in general, we operate in all the states.
And just to save you some phone calls and emails outside of the US.
That's where we don't file taxes for jurisdictions outside the United States. If you're a non-resident, though, and you have activity here within the US, you're a business owner, but you live abroad, you have US filings, we can handle the US side of things. Depending on the situation, though, that gets nuanced real quick, and we might recommend you to a different firm.
Okay, well, there you had it. And just like our recent conversation with the mastermind group, here we are again, up on time. Um, you know, a lot of best practices. We're never going to cover everything that needs to be covered in a podcast episode. And, you know, there's more questions than we have time. If people have questions and we provoke some thought today and they just want to ask the expert, if you will, they want to contact you, what's the best way for them to reach you?
You can go to our website, find our email there. I don't know if you can put it in the show notes or
Yep, I'll put
something.
it in
My
the show
email.
notes.
You can reach out to me if we can't give advice to someone that's not a client, so we could talk generally about a situation or recommend you, if you're not a good fit for our firm, to a firm that maybe be able to help you out.
Yeah, and if you're not getting the show notes, what are you waiting on? But the entire month of March 2025, at the top of the show, Stan's firm is being highlighted, and it has all the contact information there as well. So, Stan, thank you, man. You are always a benefit. I always learn something new every time that I'm with you. Super grateful personally for what you've done to transform our company. And I hope the listener got a lot out of this as well. You're a wealth of knowledge. Thanks for investing time to be on the show.
Of course, thank you for having me.
You bet. And thank you all for listening. If the show's adding value to your journey, man, it would mean the world to us if you would share it with one other person in your life that maybe could benefit from it. Until next week, keep making a big impact on the lives of the people that you're leading, and never stop turning the pressure into potential.
The Champion Forum Podcast with Jeff Hancher. Lead, inspire, win.